disclosure to a customer who's not able to understand financial jargon has to be done in a language in which he or she understands. The currency of selling cannot be the commission that they earn. The currency of selling has to be what is the customer and their life stage and what's the risk appetite that the customer has, and then the recommendation should come through. As for life insurance industry, claims is not a large issue because 98 point some odd percentage is the industry average of claims being passed, which means most of the claims are getting passed. The larger problem for life side of the business is how is the selling happening.
So to speak about this and sort of break down what these changes are, what they will look like, and what it means for the consumer, I have with me Asit Rath, who is the MD and CEO of Aviva Life Insurance. So the RBI's latest draft rules, as we were discussing, kind of contains guidelines around insurance mis-selling by banks, and there are more checks in terms of information that's disclosed, how policies should be sold, follow-ups, and so much more. So how do you think this will help the industry, and what more do you think could be done here?
So I think RBI is taken a lot of information and come out with very comprehensive guidelines. That's non-negotiable. That's what you can see as part and parcel of whatever has been laid down in the guideline. On top of it, IDA also is coming up with a commission guideline, which combination of what has been laid down in terms of the disclosures and the commission guidelines which will come from IDA is likely to change the way products are being sold by the banks, which means that a lot more discussions will have to be happening, a lot more explicit consents will have to be taken, and the customers will have right to go back. And in case of mis-selling, there will be financial, penalties which will at the distributor, which till now was mostly borne by the insurance companies. So we welcome these changes, and especially the bank assurance partners as well as insurance companies, which are doing great in terms of good selling to the customers. They will shine. So, I mean, I don't see it as something which is going to, stop the industry from growing. But yes, these guardrails will have to be very well managed and in spirit. Sometimes we manage things in letter, but not in spirit. So, which means a disclosure to a customer who's not able to understand financial jargon has to be done in a language in which he or she understands. There can be no, like, how much can you really prescribe? It has to be drilled down as far as the insurance employees who are deployed in the banks are concerned, and the way the training of the banks specialized persons are conducted. And also, if you see the guidelines, there's a lot more which has now moved away from just the branch manager to the boardroom. Now, the boards of the banks are also involved in terms of seeing what is the way bank assurance is going to be promoted and how is these guidelines getting implemented on the ground.
Right. Exactly as you mentioned, I think, there's a lot that needs to be done on ground. So especially on the system front side, I just wanted to understand the root of this problem kind of comes from incentive linked sales that are happening and, sales targets that are placed on employees themselves.
Yeah.
So what do you see execution looking like?
So I think it is not just incentive. I think there is a lot more to insurance products than just the commissions that are being given out. So the time and effort taken by bankers to understand the essence of the products will of course increase. So whoever can sharpen that piece well will have very little execution gap. So for example, most of the products that we create, they're suitable for bank employees themselves. If they're selling something to a customer which is around pension, so I mean, almost all the private bank employees who are working in India, they are not going to get pensions. They'll have to set aside income for their own pensions as well. Similarly, if you're selling a child plan, many of the average age of the employees who are deployed in the banks in the private sector, even in the public sector, they're all in their early 30s. So between 30 to 45, they all do need the kind of financial planning and the products that we promote. It's just that they have to understand better. The currency of selling cannot be the commission that they earn. The currency of selling has to be what is the customer and their life stage and what's the risk appetite that the customer has, and then the recommendation should come through. Right? So now it sounds very simple, but imagine you have 30,000 employees, 40,000 employees, or 1 lakh employees in some case of some of the large banks. So the execution will be something which has to be taken control of by both the bank's management as well as the insurers who are their partners. And it has to be done very, very seriously, and it has to be repeated again and again and again and again till it becomes like muscle memory.
Right, right. And just to wrap up on this area, sir, the RBI has also called for committees to be set up within insurance, companies and stuff like that. This includes, them checking for accountability, better, stipulation of these guidelines and all of the above. So, how do you see this playing out, especially now that there's a call for insurers also to be a part of this?
See, if you look at life insurance as a industry, uh, our largest problem is not claims. While overall, when you look at insurance, if you look and read through the newspapers and look at what is the narrative, generally, it seems like claims is a big issue. Whereas for life insurance industry, claims is not a large issue because 98 point some odd percentage is the industry average of claims being passed, which means most of the claims are getting passed by the insurers, if barring the ones where somebody has done fraudulent practices or fraudulent declarations. Now that is something which will continue. However, the larger problem for life side of the business is how is the selling happening? Are customers being forced to take something? Is somebody being forced to take a product just because someone has taken a loan product? Now, when you're selling a liability product where you are supposed to start on a journey of saving products over a long period of time, that cannot happen at a time when you're also taking a loan. For example, when you're taking a home loan, you're more worried about the interiors, you're more worried about the 15% or 20% that you have to bring to the table than starting a saving journey at the same point of time, for most of the customers. So there has to be the right timing. Whereas the same customer who's taken a home loan, 4, 5 years, 6 years, 7 years later, they may have a far better, financial ability to support a liability saving on top of the EMI that they are paying for their home loans, etc. So a lot of analytics will play a big role in terms of what and when to pitch the right product, but nothing can really change the fact that whoever is the first person engaging with the customer, they have to be interested in understanding a product, understanding why it is important for a customer to take, and propose it accordingly. I'll share an example with you that for last financial year, Aviva Life Insurance has on an average passed a claim which is just 15 lakh rupees. Now imagine the kind of cities that we are operating, kind of clients that we are operating with. We are not in the top cities. The life value of the customers cannot be just 15 lakh rupees, which means that there is serious underinsurance which is prevalent in, So there is, I mean, there is no fear of that the customers will not take life insurance products. They will need protection. They will need pension. They will need to save for a long duration for their kids, marriage or something which is very long duration, where they can start the journey of saving. But except life insurance, no other industry will ensure that if the customer is no more, the saving still continues. Our license permits us to manufacture products like that. So of course, product innovation will play a big role. But selling right to the customer is going to be great for the business. While it may look onerous to start with, but I mean, if we sell right, if the customers like a product, they all come back and they take second product and the third product, etc. So the distributors have to be patient, engage with the customers over a long period of time, and just by engaging with them over a long period of time will unlock the true potential of what life insurance industry can look like in future. When the family is undergoing such a dramatic situation like someone having passed away, just the fact that the documentation required and where to go to get the documentation, if that much support can come from the distributors, that cements the relationship that they have with the family and ultimately is going to be good for the business, right? So whichever way I look at it, I feel that the distributors will be tremendously benefited, but it will take about a decade for these practices to emerge where it gets established that, oh, this is the way to build business. Because right now, over the last 10 years, it has looked like, okay, you can acquire distribution, pay them something, and if you can acquire customers, that means it's going to be great for the business. But that hasn't played out like that for us. We had at one point close to 40 different banks which were partners with us. Aviva was a much larger company than what it is today. But when the distributors walked away, the customers also walked away with them, because we could not really maintain that sort of engagement with the customers to take them to maturity.
Right. Yeah. Great. It makes sense in the long term, sir. And just to wrap up, I think I wanted to ask about another thing that is, relevant in the space right now, which is a composite license.
Yeah.
So, with that allowing insurers to be a one-stop shop, how do you see sort of maybe covers for critical illnesses, OPD, and all of that coming in? And yeah, what is the impact that
So
you see?
life insurance companies have large distribution as well as large balance sheets.
Hmm.
So when insurance for all is such an important topic, and someone has ready-made distribution, then a composite license will bring down the cost of acquiring distribution for for most of the insurers which are large in size. Of course, that doesn't apply to us because we don't have a very large proprietary distribution or a bank distribution which is readily available. But overall, for the industry, it's good. The composite licenses will mean that there will be more and more people who will be able to sell not just a life insurance product, but a motor insurance as well as a health insurance. And why this is important is any customer who's a life insurance customer is also a mutual fund customer, is also a motor insurance customer, is also a health insurance customer. Now, if all of this is going to be the same customer, you don't want 10 different people to come and fulfill it. Right? So the KYCs are going to be easier. The customers' interactions are going to be easier as far as all of these are bundled and taken from one single place is concerned. And that's what you see in the banks as well. They've taken license for almost everything. So if customer can go take a motor insurance, a home loan, a mutual fund, life insurance policy, a protection cover, very much whatever they want from there. So ultimately, that increases the customer stickiness, and it also increases the revenue for the distributor. And the distributor has a reason to stay long connected with the customer, which will give better services. And insurance for all is not going to happen if unless the customers have the trust. They need to have the trust that the product that they have taken, there's a human being who is accessible, is going to pick up their call when they want, and is accountable for what they have understood about about the products. Right, so that's the good news. So the composite licenses, when they do come, will increase the density of distribution, but at the same time solve some of these problems. Like there's the same person maybe who's coming for life insurance can solve the other side of the at least the insurance puzzle, and give all the products under one roof.
Great. Yeah, I mean, that should, mean a lot more of easier paperwork and everything for consumers.
Yes.
And just the final question, sir, what are some of the trends that you've been seeing lately in the industry, and what are maybe some of the changes that you're looking forward to in the coming years?
I think technology is coming through in a big way to disrupt the insurance industry the way it has disrupted other industries, which is good news because it will bring down the cost of operations significantly over a period of time. And at the same time, it is also something which can give great service, personalized services at scale to the customers. So I think that is the biggest change that you will see over the next few years. The regulator is talking about PRI, where there's going to be a repository which is going to be created. Similarly, there's Bima Sugam, which has come through, with which will create a great platform for almost all the insurers to leverage it and be able to sell, digitally, and the decisions on underwriting will be more database driven than disclosure driven.
Right.
So, for example, if I know all your health records, then do I need to even ask you whether you are in good health or not? Because when I do ask you that, you give me something, and later at a claim stage it gets proved otherwise, that leads to issues of claims getting repudiated. Which in future, when we are more data driven than disclosure driven, it is going to change dramatically, and on all sides, not just on the life insurance side, but also on the health insurance, motor insurance side.
Thanks so much, sir, for your insights and your time. Thank you.
Thank you. Lovely speaking to you, and thank you for having me here today with you.
And for more interviews, keep watching Mint.